Hello there. This is James, and you're watching OneRoyal, and it's live. In today's program, I want to talk about yet another warning for the global economy caused by the T word. As well as that, I want to talk about how the Mag 7 is still magnificent, plus some other things to keep an eye out happening this week. But before we get into all of that, don't forget these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So, yes, indeed, there may be more trouble ahead because the global economic growth is slowing down more than expected. In fact, the global economic growth is growing at the same pace which we witnessed during COVID-19 pandemic. Now, this is according, of course, to the OECD. So this is what's causing this issue. The OECD. They said the global economy is on, actually, it's spelled wrong. It's OECD. Sorry, my fault. It's Organization of Economic Cooperation Development. So I actually put the letters the wrong way. So it's actually OECD. My mistake. Anyway, according to OECD, the global economy is on course to slow more from 3.3% last year, which was originally expected to grow 3.3% last year, to 2.9% in 2025 and 2026. Now, the reason for this is they're saying this is basically the fallout of the Trump administration's trade war and tariffs. They've also said it's not just the global economy. The US is going to suffer greatly as well, because they said the US economy is now expected to grow by 1.6% this year versus the 2.2% originally calculated. And the second biggest economy in the world is also downgraded by the OECD. They said the world's second biggest economy is now expected to grow by 4.7% this year versus 4.8% previously expected and calculated. So yes, indeed, this tariff effect is slowing down, as a lot of people had originally anticipated or originally said when Liberation Day happened will happen. But here's the other thing. It could get worse. It can get even worse. This is what the OECD Secretary General said. Additional increases in trade barriers or prolonged policy uncertainty would further lower growth prospects and likely push inflation higher in countries imposing tariffs. Hence, I've got to turn my light on. That's better. Hence, of course, the US economy slowing down quite rapidly to 1.6% versus 2.2% because the tariffs are going to hit the US consumer. Now, here's the thing. To calm this situation down or to make things a bit more calm and hopefully maybe get economic growth up to a better pace, we're going to need some trade deals. But we don't, we need them now. In fact, we sort of need them like yesterday. And this is what, again, the Secretary General said. The key policy priorities in this context are constructive dialogue to ensure a long-lasting resolution to the current trade tensions. So we need trade deals. We need it done now. And don't forget as well as that, we're fast approaching the 9th of July, when the delay of the 50% tariffs on the EU and the reciprocal tariffs across the whole world, bar the UK, is supposed to kick in. Okay, it's supposed to kick in. Now, we're approaching 2 months now from the 9th of April, when the Trump administration said they are going to pause the tariffs or delay the tariffs to see if they can organize some trade deals. We're almost 2 months in now. And bar the UK, which is still not properly signed, we have seen no deal. No deals. We've had positive talks potentially for a while, but where are the deals? We haven't seen any deals yet. And let's face it, are we likely to see some deals? Excuse me. Because there is indeed increased tensions between China and US, as we discussed in yesterday's video. Plus, Trump administration has also increased tariffs on steel and aluminium to 50%. Again, this is souring relations with the EU. Now, the US's two biggest trading partners is China and the European Union. They're the two biggest trading partners to the United States. And both of these, the relationships at the moment, is pretty much at rock bottom. To put more urgency to this subject as well, the Trump administration wants countries to provide their best offers on trade negotiations by tomorrow. I can't see that happening. I can't see that happening. So this again is a general concern. Okay, so straight away, and here's the other thing as well. These tariffs and this tariff drama really has been kicking in since the 2nd of April. And data-wise, we haven't seen any real impact on economic data. Economic data coming in has still been pretty positive. But this is the first time the organization has done their calculations on economic global growth and actually said these are the numbers are now revised downwards. So it's the first real sort of hint of proper data we're getting, showing us the impact of these tariffs. Anyway, there's nothing else I want to move on to before we look at the market quickly. The Magnificent Seven is still magnificent by the looks of things. I mean, the S&P, as I mentioned in yesterday's broadcast, had its best May since 1990. That's 35 years. Now, what are the driving factors behind S&P 500 having such a good month? Was because of the Mag 7. Because of the Mag 7. Now, the likes of Apple, Alphabet, Microsoft, Amazon, Meta, Tesla, Nvidia combined, they made up 62% of the S&P's advance in May. 62% was made up by the Mag 7. Now, here's the thing, as well as that, 6 of these Mag 7, okay, 6 of the 7 stocks outperformed the S&P 500 by 6.2% gain. Let's have a quick look actually at their performance of the Mag 7. The only one which is lagging behind is of course Apple. Apple did underperform, and it didn't really have part of the 62% drive. Now, obviously, Apple, there's a reason why Apple is lagging. For one, Apple was going to be greatly affected by this trade war and tariffs. Bear in mind, a lot of the phones are made in China, and then he's looking to move manufacturing to India. And then, of course, don't forget, Apple was then threatened by the Trump administration that they will face 25% tariffs unless they make iPhones and Apple products in America. You can see why Apple is really lagging behind. Okay, but the other Mag 7 is performing really well. But this brings me to another factor, though. Another thing which is quite delicate. And we discussed this last week as well when we talked about Nvidia's earnings. Now, the S&P's bull run or drive is really being driven, of course, by the Mag 7. What if the Mag 7 starts to flag? What if, with increased AI technology coming from China, like DeepSeek, Nvidia starts to wane? There's another thing, another potential black swan event as well, this time for Alphabet, for Google. What if they lose their court case and they have to give up their browser information? That's going to greatly affect them. Amazon as well. These tariffs, when they start to kick in properly, how's this going to affect their sales? Same with Meta as well, with Meta technology as well. So though the Mag 7 is the driving factor behind the S&P 500 success, and don't forget Tesla as well. Tesla's got its own problems. Its European sales are declining rapidly as well. But my whole point being, if we see the Mag 7 start to flag, start to suffer, like Apple is suffering, if all the Mag 7, or maybe just 3 of them or 4 of them, started to follow what's happening to Apple at the moment, how is this going to affect the S&P 500? Well, I tell you, most likely it's going to start pulling down the S&P 500, because the S&P 500 has become so reliant on the Mag 7. So again, yes, at the moment, there is much rejoicing, by all means, but relying on, oh, excuse me, bless me, that came out of nowhere, relying on 7 huge companies for your success can be quite dangerous. So we'll have to see how that develops. Anyway, let's have a quick look at the market as well, see what's going on. As you know, the market's been open now for about 45 minutes. So let's have a quick look at what's going on in the market. Well, the S&P 500 is on a 30-minute. Again, say it closed slightly lower. Yesterday's up slightly today, 0.12%. So not, despite what the OECD, it says, it's still a bit tepid though. Still very delicate. But like I said, the market's only been open for, say, 45 minutes or so. The NASDAQ, it's the same with NASDAQ, like I say, had a better month than the S&P last month. It actually rose by 8.8%. Again, mainly all driven by the Mag 7, especially Nvidia's better than expected earning report. Currently trading slightly up higher at 0.41%. We look at the Dow as well, 0.12% negative, down only 47 points. So nothing too dramatic there whatsoever. And if indeed we look at the Mag 7, because I say the Mag 7 outperformed the S&P by a fair bit. Definitely Nvidia did by 20%. It had a very good month. Tesla currently down slightly, 0.10%. Meta slightly down, 0.23%. Microsoft slightly up, 0.3%. Amazon 0.66%. Alphabet, which I think is going to be really interesting, this court case. And I'm going to do, I'll go into a bit more detail on this tomorrow about Google, about Alphabet. Because like I say, that court case could be a really big black swan event waiting to happen for Alphabet. Could be huge. So we'll do a bit more about that tomorrow. Nvidia, still performing extremely well, really. 2.94% up for the day currently at the moment. We have a look. Year to date, it's up 4.02%, but it's down negative 0.37% for the last 6 months. But over, since Liberation Day, it's performed quite well. Again, like I say, because its earnings report was a lot better last week. It's holding its own very, very well. Apple, like I say, though, Apple is currently trading slightly higher, 0.29% on the day. But if you look, there's a lot more red on Apple. Though it's up this week, monthly it's down 1.01%. 3 months 14%, year to date down 18%. So again, Apple is struggling because I say Apple is directly going to be impacted by these tariffs. The others are going to as well, but it's a slow death for those at the moment. They're not being impacted quite as much as Apple is at the moment. Okay, with that as well, I think it's also time to do a bit of a currency update. So let's do a bit of a currency update and look at some currencies as well. Because obviously yesterday, the dollar was under a lot of pressure. It was a weaker dollar. It looked like it started out potentially having its 5th month of losses against the majors. Today, slight recovery. As you can see, the euro is slightly down compared to yesterday's level, 1.1387. On the 30-minute, bouncing off that potential support at the moment, 113.76. If we look a bigger picture on the day, however, okay, we are negative for the day, but like I say, it's still riding high against the greenback. The greenback overall is still weaker, though the dollar's just having a bit of a fight back today. We can say the same about the cable as well. Trading 135.42 as well, down for the day against the dollar, but overall still maintaining the momentum it's had against the greenback. And we can say the same about the dollar yen as well. Slightly off the lows yesterday. Yesterday got down to 142. Like I said, potential support for it was 142.09, which he managed to just retrace above, just about a little bit above that. Currently trading at 143.74. And of course, it wouldn't be a broadcast of mine if I didn't, of course, speak about gold. Gold, again, dollar strength slightly today, which makes sense after it was getting hammered yesterday. So, but gold holding its own still trading at $3,343 an ounce. It's like I say, still way above that trend line as well. Anywho, let's talk about what else is happening this week, things we need to look out for, because it's not just about tariffs and trade wars. But sometimes it seems like that's all it's about, because we have obviously got some economic data, key economic data coming out this week to look out for. And there's a couple in particular I'm really excited to see. Now, this week we've got EU CPI, which you had today, came in as expected tomorrow. US ADP, Bank of Canada interest rate decision. US ISM services PMI, ECB interest rate decision, ECB press conference, EU GDP, EU retail sales, and of course, US non-farm payroll. Now, the ones in particular I'm keeping an eye on is going to definitely be the ECB interest rate decision, expected to hold rates, but it's their press conference. Their comments, they're going to talk about the current economic situation, and especially what they have to say about what the OECD said today. And of course, the NFP on Friday, number expected to come in 130,000. Previous reading was 177. So we need to see if there's any signs at all of the US labor market slowly slowing down. Don't forget, this, of course, is a live show. So you can talk to me anytime you wish, or ask me questions, or, share with me your opinions. Let me know what you think. And like I say, if you're indeed watching me on YouTube and you like this type of content, subscribe if you like. Hit the notification button so you know next time I'm going live. And if you enjoyed this type of content and you put up with me, my over-the-top enthusiasm for the markets, by all means, give me one of these. Okie dokie. On another matter as well, I do notice that a lot of people do go back and watch the recordings. They can't make the live show, so they watch the recordings. If you are watching the recording, and by all means you do have a question or have a comment, put it in the comment section below. I will see it and I will reply to it next time I go live on air, which of course will be tomorrow, which I go live every single day. As well as that, if you're not already a member of the OneRoyal family and you're interested to know a bit more about us, there's a link in the description below. By all means, click it and have a look at us. Okie dokie. If there is no questions, leaves me to say then is this. Don't forget, these little videos are for educational purposes only and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.